In today's video, I want to touch on a stock I previously owned, sold because I wanted to consolidate my portfolio. This company was always a very, very good company, a fast growing company. So even when I sold it, I was like, should I not sell it? Because there was really no reason other than the fact that I wanted to have fewer positions in my portfolio and actually buy more shares of the other stock, which was Mercado Libre. So of course, the stock we're going to touch on in this video is Nu Holdings. Now, Nu has been a tremendous company, super fast grower as well, and now might actually a big opportunity to buy back in the stock or add to your position if you're a holder of this company. Now, in the last month or so, this stock is down close to 25%. Now, I'm sure some of you might think that, oh, this is just a stock that's worth around $12 or so small company. Yes, you might think I'm crazy, but I've seen plenty of those comments already. But no, actually, this is a company that is already quite big. This has a market cap close to $60 billion. But here's the thing. This might be a $60 billion company. But if you look at the forward PE, 21.3 times, when you see what the market is expecting this company to do, in my opinion, this can still be an absolute monster in your portfolio. If you look at sales growth, the expected sales growth for fiscal 24, 25, 26, then EPS growth for the same fiscal years. I mean, this is very, very difficult to say no to, right? I've rarely seen these types of companies grow that fast. And on top of that, it's also operating in Latin America, might actually expand internationally. Remains to be seen what happens with that. But Latin America is a very, very interesting continent for me. That's why I'm quite bullish on Mercado Libre, quite bullish on dLocal as well. And that's why I actually bought Nu when it was under $5, sold when it was closer to 10. Of course, it went higher, but now we're back at around $12 or so. I have cash. So yeah, maybe after this dip, it might actually be a good opportunity to buy back in. Now, there is a reason why this stock has come down. And we're going to have to, dive a little bit deeper to understand if it can go lower, if it makes sense, or if we should actually care about what happens in the short term. So let's discuss all of that in this video. If you enjoy this type of videos, give it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment. Get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I do first want to show you two extra things. One is the average analyst price target that sits 31% higher than the price we're at today. There are 20 analysts covering this company, 2 with a sell rating, 8 with a hold, 7 with a buy, and 3 with a strong buy. Looking at some pricing metrics, forward PE much lower than the 5-year mean. Price to sales sits at 4 times compared to 6.3 times. And price to free cash flow, that's in the last 12 months, 15.5 times. So yeah, I mean, you're getting here a very, very good company, in my opinion, at a very good price. So what exactly has happened? Well, last week we've got this that came out. Brazil's government on Thursday detailed spending cuts aimed at achieving more than $11.8 billion in savings, or 70 billion reais, over the next 2 years to support its new fiscal framework, but investors remained anxious, roiling financial markets. Investors were surprised by an announcement that tax exemptions would rise and worried that the government was relying on overly optimistic fiscal projections. So what exactly is going on in Brazil? Well, if you look at the inflation rates in Brazil, it has, started to go back up back in June. In May, that was at 3.93%. And since then, we've seen it increase. Last time I got the number here in October, 4.76%. Now, of course, previously, pandemic and all of that, then inflation was quite high and then it started to go back down. The goal here is to get it back to 3%. Now, since we're going the wrong direction, fears are rising. Now, that's not all bad for Nu, right? Because a positive thing could be, an increased net interest margin, strong loan portfolio, but then on the flip side, could also reduce demand for loans, increase cost of funding, and if these things continue, economic slowdown will follow. If we look at GDP growth for Brazil in the last 10 years, we've got 3 times where we've seen GDP basically be negative growth. That was, the pandemic. And then previously, 2015, 2016. What happened then? Political instability, commodity price decline, tight monetary policy. So to combat inflation, they'd have to implement tight monetary policy, raising interest rates, which is probably what we're seeing right now, fiscal challenges, and then, of course, weak consumer confidence, which, of course, leads to fears right now that maybe Brazil might be heading in the same direction. I would also like to remind you that the president of the country is not an angel or a saint. Continuing here on the fiscal policy and tightening policy, should I say, is the fact that, well, unemployment rate continues to go down. So, yeah, when unemployment rate continues to go down, but then you see inflation go up, then, well, you know what's going to happen. Interest rates will increase. And so right now, looking at the Brazil 10-year bond yield, that has started to go back up at the start of this year. We're now at 13.5%. So yeah, why buy stocks if you can get 13.5%, right? And back here in 2016, we were actually, well, closer to 17%. So yeah, all of this plays its part in short-term volatility in the stock market, especially for companies that are exposed or are operating in Brazil. If you look at the Brazilian currency compared to the dollars, right? US dollar to Brazilian reais, well, the US dollar has been gaining and has become more and more powerful, where the Brazilian currency continues to go down. So of course, when you're taking in revenue in a certain currency, and then that currency becomes weaker and weaker, that's not really great for a company, well, like Nu or Mercado Libre or any other company that operates in that region or country. But now that we've got all of that out of the way, let's not forget what type of company Nu actually is, right? Customers have increased 20.7 million year over year to now close to 110 million. They've got 56% of the adult population in Brazil. They've got an 84% monthly activity rate. Revenue increased 56% on an FX neutral basis, again, FX neutral basis, to $2.9 billion. Gross profit increased 67% on an FX neutral basis year over year. Gross profit margin at 46%. Annualized ROE sits at 30%. Net income is up 107% on an FX neutral basis year over year. I mean, this is a company that is incredible and incredibly powerful as well. Now, it's true that growth rates has slowed down a little bit, but all in all, this is still a fast growing company. And I mean, isn't this a beautiful thing to see, right? Revenue goes up like crazy up and to the right. Then we've got that nice inflection point here back in 2023, net income positive, and that continues to go up and to the right as well. Now, it's true that if the Brazil economy does go down the drain and we see some type of scenario like 2015, like 2016, although back then Dilma Rousseff did get impeached, I don't know if we're going to see it again, although I wouldn't be surprised. But yeah, you have to take all of that into consideration, especially if you're looking into buying companies that are heavily exposed to certain countries, certain regions as well. But all in all, I mean, we've seen Nu navigate pandemics, right? We've seen Nu navigate slowdown in growth, economic challenges and stuff like that. That didn't really stop the company from growing. Plus, even if worst case scenario, we do get into the situation where it's similar to 2015, 2016, I think Nu is much better positioned today as a company than any of those companies back in 2014, 2015, 2016. They will be able to navigate those times better. They will be able to provide better service to their customers as well. Why is that? Well, because it's just a company that was built for the modern day, and modern day companies can deal with those challenges much better than the traditional legacy companies. That's just my opinion. Yes, growth can slow down a little bit. Yes, we've seen also the loan profile, loan portfolio. It did go up. The NPL 90 plus days did go up a little bit. They say they're doing this deliberately to grow even quicker. Okay. So far, I have not seen any indication why I should doubt management. Until that happens, why doubt them, right? Why doubt them? So currently, if we look at the stock, we can see that it is under the 200-day moving average, which is not that great. But We've seen that happen also back here in August, although back in August, that was the August 5th Monday, Black Monday event, which didn't really last that long. So went under and then we went back up. Could we see the same thing happening here? Remains to be seen. The momentum is definitely not with the stock right now, but I mean, if it does go closer to $10 or so, I'd be a happy buyer. I might actually open a tiny position already right now at $12. If it goes further down, I'll buy. If we see rebound, we'll see rebound. I mean, you're buying a business, you're not buying a stupid candle here. You're buying a real business, a real solid business as well. So yeah, for those of you that have asked an update on NIO, this is the update. I'm pretty bullish on this company, have been bullish on this company forever. Even when I sold the company, you can see my coverage on this company has been continuously bullish because, well, I see no indication why I should think otherwise. So yeah, that's about it. That's all I've got for you in this video. Of course, do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.